You're saying that Twitter was more bloated than the federal government?
I don't know.
Welcome to the Telltales Podcast, where we discuss cash flow and its pivotal role in investing. I'm Mike Nicoletti.
And I'm Jason Wallace. Along with our co-host Hunt Lawrence, aka Mr. Cashflow, we're here to explore how cash flow drives the economy and investment performance.
And don't forget to join our email list at telltales.us to get the cash flow memo. It's about 20 pages covering 80 companies, U.S. government's finances, and the energy sector.
It's like having a masterclass on investing in your inbox every week.
The following conversation is intended for informational purposes only. You should always do your own work to determine if an investment is suitable for you.
Hi.
Hi, Hunt. How are you?
Good. Gwendolyn and Holly are on their way in. We got lots of ground to cover today. So I think we'll do 3 exhibits, and then we'll get into TSMC and BYD and Vertex Pharmaceuticals for about 4 or 5 minutes. Let's start on Exhibit C. There's lots of publicity in the last day or two on reduced oil consumption forecasts. Both OPEC, which took their forecast down about 150,000 barrels a day, and the IEA, who is more than that, is a couple hundred. I think it's, as with all commodities, it's China. And met coal is much weaker. Iron ore is much weaker. There's an article in the Financial Times this morning on the world's largest steel company, which is 7% of the steel produced in the world, saying a winter is coming, a cold winter. What has happened in China is 25% of their economy was buildings and infrastructure, and that's all slowed way down. So I think this is all a bit overdone. The price of oil is holding up pretty well because people expect some type of activity by Iran, missiles or drones or whatnot, to punish Israel or to kind of play tit for tat for Israel on the loss of the political leader of Hamas visiting in Tehran. The leader's compound is very embarrassing for the Iranians. Something will happen there. And the question becomes, what then? And I think what then is a somewhat lower oil price, mostly because that extra capacity, which you see in Exhibit C, 4.4 million barrels, I'm hoping, and I think the oil market will be hoping, that more than half of that is with Saudi Arabia and the Emirates. And they have said that they're going to start to feed some of that oil into the market in the fall. Hopefully they'll go back on that decision. Exhibit B, gas will be better, I think. I mean, it got to a level in August that was just kind of unprecedented. You go down and you see the 8.8 price, it's $2.08. I mean, it's just a crazy price for August. What happened is there was surplus. So if you took physical delivery, you might not be able to find storage. Same thing that happens out in Waha in West Texas, where gas prices go negative. And I think as we get into trading the November contract, we'll start to see something in the $3 range. But we're going to talk about gas stocks later. I think with both oil stocks and gas stocks, better to wait. You may have an opportunity to establish your position early. The last thing we want to cover in the exhibits is government revenues and expenses. The Treasury Department came out with a report saying that the deficit for fiscal 24, which is the next to last column here, is projected to be 1.9 trillion, not what we have here, 1.6 trillion. I think the difference is student loan forgiveness. And I don't think that should be considered to be a cash outflow. From an accounting point of view, I guess it's an expenditure because you're forgiving a debt owed by student lenders. But I don't think it's cash flow. Everyone's speculating on interest rates, the Fed funds rate coming down. The 10-year Treasury is down under 4%. I personally think that the 10-year Treasury and the Fed funds rate will continue to show at least 1.5 or 2 points of real interest rate. So if the inflation rate is 2%, 2% plus 2% real interest rate would be 4. So this expectation that somehow rates are going to go back to what they were after '08, the Great Recession, as they call it, in '08, I just don't think that is going to happen. And with that, I'm going to see if Mike or Jason have anything to add on the macro sides.
I just echo what you said about rates going back to where they were. I think there's a lot of wishful thinking in a lot of different sectors, but particularly real estate, and then again for residential mortgages, that rates are going to go back to 3% mortgages or something like that. And I just, given the amount of debt that the Treasury will need to issue, it's a supply and demand problem. And when you increase the supply and there's not a clear path to there being more demand, the price has to go up. If anything, we're seeing more of a less of an appetite for other central banks to hold the U.S. dollar. So, I think that's probably the big thing that maybe is priced in, that rates are going to be going down, that maybe isn't actually the case.
I have a question for Jason.
Mm-hmm.
In the Twitter interview between Elon Musk and Donald J. Trump, Musk volunteered to be head of a commission to reduce the deficit, which I thought was terrific, because I think both candidates will avoid the deficit. They won't want to talk about it. So at least he raised it. But what do you think of Elon Musk as leading a commission to try to reduce our spending? Do you think that's feasible at all?
I wish it was, but I don't think it is. They'll have a hard time. And I didn't listen to the interview yet, but from what I've heard, they're referencing the headcount in the U.S. government. And there's a lot of bloat, and I've seen it. They'll try to waste money at the end of their fiscal year so they get the same budget back. It's never a discussion of what they need to run that agency the next year. It's more of how do we spend everything we have now, so we'll get that allocation plus some more. So I wish it was a case where we could change that culture, but I doubt it. Trump didn't do it the first 4 years he had. If he had 4 more, I'm not sure that such a large change could be pushed through.
Right.
Certainly not overnight, but
yeah,
at least that would shed some light on the problem. And I think this is a similar issue that we have in California, that certain levels of government employees, it's impossible to fire them. And the federal level, it's similar as well. Not advocating for mass firing of people, but when you have a policy in place that basically prevents any firing at all, you just by nature are going to end up with more bloat. And the question is, and maybe the purpose of having an efficiency commission like they were proposed, is to try to figure out, where's all the bloat. And what Elon did with Twitter is pretty impressive, right?
Yeah, I think that was a special case, but of an extra bloated organization. But
you're saying that Twitter was more bloated than the federal government?
I don't know.
Mike, what about Facebook? Because Facebook more or less did the same thing, and Google's doing it over time. Every quarter, Google reports fewer employees.
Well, I think if you want to do that without ruffling feathers, maybe putting Mark Zuckerberg and or Sundar on the efficiency commission might be a smarter way to do it. The problem with appointing Musk to something like that is he's just going to piss everybody off in the process, but he'll get it done. So there are probably more graceful ways to accomplish the goal.
Yeah. Mike and Jason and I have had the benefit of 2 18-year-olds interning, Wendell and Lawrence last week, and this week, her good friend Holly Miller this week. And they sent out 3 papers, which you all should be able to access. One's on TSMC, Gwendolyn did. One's BYD, also Gwendolyn, and one's Vertex Pharmaceutical, which Holly's done. And I thought we'd take a couple of minutes here. I told them no rehearsing, and I'd ask them a couple of questions about their work. And I think since Holly is the non-family member guest, we'll try Holly first. Holly, Mike, earlier this year, because Mike and Jason own Vertex Pharmaceutical, Mike found a book or some articles or what to try to figure out how there was in a relatively small, not very prominent, unless you're in the pharmaceutical business company, how that spirit of innovation and whatnot came about. And what Mike found and what Holly's found and was written about is the fellow who founded it really was on a mission. And because he's still alive, he's still on a mission. Why don't you give us a couple of minutes?
He really had a vision kind of from the beginning of his life of what he wanted to do with his career. I think when he was 13, so he was writing a report for school, and he said he had the goal of, quote, ridding man of the virulent disease, which, as a 13-year-old is quite a lofty goal to have. And I think that kind of being the heart of his mission, it carried on throughout his career, really wanting to help people. So he started at Merck Sharp and Doane Research Laboratories after his postdoc fellowship. And there he really advanced quite quickly. By the time he was in his early 30s, he was the senior director of basic chemistry research. And he really saw the two main needs in the company. One was, it was the 80s and there really was not a lot of technology aiding their research there. So he ended up actually bringing his 35-pound personal computer in his backpack to and from the office every day because they weren't allowed to keep the computers overnight in the lab. And so that was the first need, and there really was not a strong IT department at the time. Then kind of the second major one he saw was that all of the departments, bio and chem and small IT departments, they were really not working together and collaborating. And he kind of saw this need for more interdisciplinary collaboration to the kind of facilitate the kind of research he wanted to see.
And then a very clever venture capitalist courted him for about 6 or 9 months, saying, Merck will never do it. You'll have to go off on your own. And that became Vertex Pharmaceutical. And Mike, that pretty much agrees with your look at the early days of Vertex.
Absolutely. As with most of these companies' stories, it's the exception, not the rule. That you're talking about a guy who was uniquely gifted as a chemist and a scientist and just a really fascinating brain. Not many people have the vision to stick out 20 years without recognizing any revenue in a business in order to prove a point that's sort of maybe logical, but also not obvious. And, and Holly, let me know if this disagrees with what you saw, but, the way that Merck was discovering drugs when Josh was there, it was maybe shifting towards this kind of rational design and whatnot, but slowly. And then not having the departments interdisciplinary seemed like a barrier to innovation. But, that's a pretty, to base the idea of I'm going to build the next great drug company based on those two innovations seems a little loose. And then you follow the story of Vertex, and they should have died so many times. They raised money at the right place, the right time. They had the right science come through just to keep them alive long enough to raise more money so they could survive the troughs. And then, not to jump ahead, but they get into CF totally accidentally, right? They make the acquisition of a company based in San Diego that just happened to have a relationship with the Cystic Fibrosis Foundation. And they didn't kill it because the Cystic Fibrosis Foundation was willing to continue funding the research. I think otherwise they would have killed it. And then to top that all off, that whole franchise wouldn't have been valuable if it wasn't for the fact that Obamacare got approved. So all these decisions were made well before these sort of random events occurred to make history what it was. But at the end of the day, they've sort of been proven right in their theory about their approach to the science. And that's probably the coolest thing about this story, at least that I take away from it.
And cystic fibrosis, where your lifespan, Jason would remind us, used to be 30 years or something, and now it's 70. So it's fantastic.
Right.
With people. benefit from the medicine.
It's really incredible.
Yeah. We took a little more than 4 minutes. Let's try to be shorter on TSMC. I was just fascinated with TSMC because the fellow who founded it worked here for TI until he was 55 and then moved back to Taiwan. He was mainland Chinese. But the question I have and I'm fascinated with BYD, even though I don't think it's investable. The question I have for Gwendolyn is, now that she's pulled the early part of TSMC together, which just has a dominant position. I mean, Intel may not make it. We'll get Jason on that in a minute or two because of the dominance of TSMC. But when you look at BYD, what do you see that's similar between, I mean, obviously the founder of BYD is equally driven. And, we have, and we will talk a little bit later about Tesla, but if there's a big risk for Tesla, it's BYD.
Yeah, absolutely. I'd say the common ingredients for success that I see between TSMC and BYD are that they're both tech companies that were able to harness the power of the desires of the governments that they were working under. So Morris Chang, pretty late in life, in his 50s, founded TSMC, but it was really the Taiwanese government's project that they decided that Morris Chang would be the best person to head. And so the way that he was able to do it was through Taiwan's funding of it. And BYD was able to be so successful because the Chinese government was so determined to promote green energy, electric vehicles, and it put out a bunch of incentives for both companies and consumers to be buying these electric vehicles. And they recognized that and were able to take advantage of that market. And both of them also understand that as tech companies, the vital thing is to stay on the cutting edge and ahead of your competition's design and engineers. And so they're both extremely focused on finding the best talent in the world to be able to produce for TSMC semiconductors, for BYD batteries and electric vehicles, and find whoever can really break the barriers of whatever is at the current edge of their tech.
Jason, would an assessment of BYD chase you out of your Tesla position?
I don't think so. There's going to be room for multiple auto manufacturers in the age of EVs.
We were going to do energy today, but I'm going to pass because I don't know what's going to happen to the price of oil. I think the price of gas will get better. And I really think we want to talk about energy companies. So that gets us all the way up to page 8. We're starting from the back. And here on page 8, we have these retail businesses. We have Home Depot results, which show, kind of weak consumer. To go back to what Mike was saying about expectations for interest rates, that would be one thing that would rescue Home Depot and Lowe's. But as Mike and I and Jason talked earlier, I think to get back to 08 levels is extremely unlikely. But I think since we're down to 10 minutes or so, we spent a fair amount on Vertex. Jason, anything on Lantheus or Harrow for news?
Well, Harrow reported earnings with sales exceeding expectations, and obviously it was well received by the market. Just a reminder that it's a smaller company, so their guidance was about 180 million in sales for this year. Now they're looking at a run rate of 200 million in sales, and that's growing quickly. So I talked about their 5-year plan before, that they're a year and a half-ish into. They want to be $1 billion ophthalmic pharmaceutical company. It's a mouthful there. And then that equates to like a mid-40s compound growth rate, which they're hitting now. And there's reason to believe they can keep that going. Since their main drug has been in the market 2 quarters, their other drug has been about a year in the market. New drug adoption follows an S-curve. So there's a small percentage of physicians that will adopt a new drug in the first, call it, year and a half. And most physicians are going to wait to see how that's performing in the market, how patients are being treated, how they respond to it, before you really see growth take off. So Harrow hasn't hit that yet on these drugs. Early indications that they have great prescription refill data coming in. It seems the company feels like they have a product that is best in class. It very well could be with the prescription refill data that they're getting. A couple more quarters, as I said, the physicians are waiting to see too. A couple more quarters of data come in. Maybe we'll really see sales take off.
And Lantheus, I guess, had pretty good results as well.
Yeah, pretty good. At the same time, expenses, R&D particularly, and then their sales budget really grew. They hired a lot of sales staff to prepare for new drug launches. So at the same time that their sales are doing well, their expenses were increasing.
I think there's a corollary here to Vertex, because in the early days, Vertex had to build a lot of their commercialization business ahead of the demand. And that's a little bit of a tricky situation. You don't have FDA approval potentially, but you are in anticipation of that approval. Maybe you're building out a sales force and you're already starting to engage with doctors so that you can get this going as soon as possible. And it seems like that's what they're doing. So in a way, that's a signal for management that they're very confident in what they have. But as an investor, of course, it's somewhat concerning because they're spending the cash flow, and you hope they're spending it well.
Yeah.
Speaking of that, Microsoft got criticized. We switched to page 1 for spending capital spending in their fourth quarter that was in excess of any prior year. I don't know whether that's accurate or not, but whenever we've talked about Nvidia, you guys have pointed to the Capex programs of the large cloud companies, and that just seems to be continuing. The quote I remember, I think we've talked about this in prior Wednesdays, was the CEO of Google saying, the risk of underinvesting is greater than the risk of overinvesting. So based on that, I mean, we won't see Nvidia results for another couple of weeks, I guess, but because they're 1 month delayed. But it does seem, looking at those capital budgets, that their sales level will continue to be in excess of 25, 30 million a range per quarter, which they're so darn profitable that it comes down to quite a lot of free cash flow. And even though it's going up so much, it's still, 40 times free cash flow or so. Is that how you guys read the Nvidia situation?
Yes, and Jason and I are putting finishing touches on our Q2 letter to our partners, in which we'll cover where we see CapEx and why are these companies spending. And all of the hyperscalers see a clear path to investing in this stuff, and we don't see it slowing down. Potentially maybe in 26, but at least for the next couple of years, we've got a pretty clear line of sight on what everybody's building out. Now, there are some potential roadblocks, right? We've talked a little bit about the challenges of getting the actual power to the data center and how that potentially could be a roadblock to uptake, at least in the US. Maybe in other countries, it won't be as much of an issue. But in general, we'll call them hyperscalers, the largest operators of data centers in the world, Google, Amazon, Microsoft, Meta, Oracle, they are all moving forward. And part of the rationale, and I think Meta's Q2 call was really informative from their way that they're thinking about things. And essentially they're using the latest generation stuff for training. Once they get through training, maybe they'll buy some new equipment for the next generation of models. And then that old data center will be used for inference, maybe for generative AI, or maybe even for recommender systems. So, and I think if you listen to Jensen, I think that his vision of the future of the world is based on the fact that more companies will be like Meta in the long term. And basically that boils down to moving more workloads off of CPUs and onto GPUs. And Meta is case in point of a company that is doing that. And they're probably doing it the fastest and most effectively, and seeing very good results from doing so. So if that's the case, if the way Meta goes is the way the rest of the world ends up going over the long run, it's a very good picture in general for Nvidia. Now, Nvidia also has, over the next 10 years may have more competition. Their moat from CUDA may erode over time. There's so much profits in what they do. Everybody's looking to displace them. So it's an exciting market to watch. And for now, I think all is good. And Nvidia does have a fairly commanding lead.
Yeah, I would add one risk that I remind Mike of, but I don't hear too many people talking about is software innovation. So the risk could be that either we invent a whole new type of algorithm that's not one of these large language models that either uses a lot less GPU compute, and then maybe we need to build half as many data centers, or it's just well suited for a different type of chip. Or the other case is we make these language models extremely efficient, and then again, they need a lot less compute to train or run inference on, or that kind of thing. So software optimization could be a risk to the amount of GPU chips we need from Nvidia.
And so if you want to go down that rabbit hole on the types of compute and CPU versus GPU type of processing, our quarterly letter will kind of go deeper in the weeds on some of that.
Great. Will you send the quarterly letter out to everyone who gets the podcast and the 20 pages?
Yeah.
Glad polish stuff. That'd be great.
Yeah. It'll probably come out between now and next week. So. Yeah.
Great. The Google and antitrust, something I don't fully understand, and Will it's a light companion, so litigator, so he'll have some views, but they've lost the trial, the district trial. They will appeal it, but the recent news articles, the Justice Department is considering remedies at the district level. Do they then propose remedies ahead of Alphabet going to the appellate level, or how does that work in antitrust litigation?
I'm afraid I'm not qualified to answer that properly. I can defer that to Kellen. She might be able to straighten us out. But my understanding is that they will appeal. The current agreement between Google and Apple runs through the middle or end of 2026. And likely the scenario is probably a big fine and essentially status quo, but instead of it being just a private agreement among two quote unquote monopolists, it'll be an open agreement that anybody who meets certain qualifications, DuckDuckGo, Microsoft, Bing, et cetera, can participate in. And likely you will have to choose your default search engine, and very likely Google will remain at the top because Google generates the most money for Apple too. So,
yeah, what I think is interesting is the payment that Google makes to Apple is considered illegal or anti-competitive because they are the monopoly, but that's not the case for DuckDuckGo or Bing. So can they then legally pay Apple for that right? And Apple still gets their $20 billion to the bottom line.
I would have to think that $20 billion in Apple's bottom line is really at risk, because I doubt if any other search engine can afford it to be the default search engine, because people may still switch to Google. So it seems to me the loser here from a cash flow point of view may be Apple.
Right. That would be the case if the ruling somehow disabled Google from paying Apple, and that would be interesting if that was the conclusion.
Right. Anything else in news on page one before we break for the day.
Jason, you want to cover the new Google phones? Those pretty cool presentation.
Yeah, so Google announced their new line of Pixel phones. And the big thing, obviously, is their analogy to the Apple Intelligence. It's the Google Gemini product. And it appears to be all the same features that the Apple Intelligence announced. The difference is Google's going to launch this phone next month, and you'll be able to use those tools, where Apple's going to presumably launch the next iPhone in the fall, as they always do, but the intelligence product won't be available until maybe February or March of next year. And then I would just highlight one difference in the specs in these phones is the Pixel phone has 16 gigabytes of RAM. And why that matters is these AI tools require a lot more memory to run on device. The current iPhones have either 6 or 8 gigabytes, depending on the model that you purchase. So Apple's going to really have to increase the amount of RAM in their next version of the iPhone. And that's an expensive component in the phone. So either they're going to have to raise the prices of these phones to be, starting close to $1,000 each, or it's going to eat into the margin. And maybe that's okay, because Google's going to charge for their Gemini product $20 a month after your free 1-year trial period. So potentially the iPhone margin shrinks quite a bit, but then they're going to capitalize on service sales then in the future for the Apple Intelligence tools.
Oh, so are you proposing that Apple's going to charge for Apple Intelligence?
I mean, it's pure speculation,
Yeah.
but
no, it'd be interesting. Yeah.
It would be, yeah. And if Google's setting the precedents, and it's interesting because these tools run on your phone, you're not using a cloud service, so they're charging you for a feature on your phone. And it does seem like the industry is kind of settling on $20 a month for whatever AI tool that you're going to purchase.
Or we run out of runway. We'll get into Microsoft next week, and I promise to not skip the energy next week. I'll go through the 4 energy pages next week. In the meantime, everyone be well and stay healthy, and we'll be on exactly 7 days. Take care.
The views expressed on this podcast are the host alone and do not constitute an offer to sell or a recommendation to purchase or a solicitation of an offer to buy any security nor a recommendation for any investment product or service. While certain information contained herein has been obtained from sources believed to be reliable, neither the hosts nor any of their employers or their affiliates have independently verified this information, and its accuracy and completeness cannot be guaranteed. Accordingly, no representation or warranty, expressed or implied, is made as to, and no reliance should be placed on, the fairness, accuracy, timeliness, or completeness of this information. The hosts and all employers and their affiliated persons assume no liability for this information and no obligation to update the information or analysis contained herein in the future, and may or may not hold positions in the securities mentioned.